Hello everyone, it is Evan from the Trade Risk on Wednesday, August 12th, here with a market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, some leading sectors, individual names, and then finally some trade ideas for the remainder of the week. Now, jumping in today's action, it was a crazy day today. We had a 3.5 point range in the S&P, in the SPY ETF that tracks the S&P 500. Big news today, of course, is that the buyers stepped in. They bought this dip when things were looking at its worst. We found that bid appear. Buyers continued to take control throughout the rest of the day, and we ended up closing on the highs. We closed effectively exactly where we closed yesterday. So a lot of range, a lot of movement, and then when everything was said and done, the dust settled, we were back to yesterday's close. Now, let's take a look at where we were today. We were all the way down to 205.30. That's below the previous 2 weeks lows, and we were coming into this very, very important long-term 204.50 support. We didn't get there, of course. We did see, we did see that bid appear before we could retest this major support, and we did drive higher back above 208. So where are we now? We are just smack right in the middle of this range here in the S&P 500. You can see the fast-moving averages are still just above us, and today definitely a win for the bulls. They held in there, but it's a defensive win for the bulls. I mean, I think there's a difference between being very bullish and taking out resistance and breaking through previous overhead supply, and then there's bullish being we defended a support level, now let's see if we can work ourselves higher. Nothing has changed from yesterday, really. I mean, except for the fact that we had this incredible retest of this area down here. So I think going forward, we're still in this range. We need to just monitor this level. We want to now, the lows from today are very important. This whole area, this 206 to 205 area, all right down here, is a very important area that we need to continue. We need to hold, and you want to see us eventually lift out of this. We don't want to keep retesting it and look for these major victories like we saw today from the bulls, because eventually, they aren't going to come to the rescue. So I think we got to pay close attention to tomorrow. Let's see if we can build off this. Let's see if we can break now back above some of these fast-moving averages that are flattened out just above price. So back above 209.50, back above 210, get to the top end of this range. That's what we want to see to be ultimately as constructive as possible on the upside. Now, looking at some other markets here, IWM, everything's pretty similar. I mean, we had IWM break below this 120 level all the way down to 117.50. If you look on a weekly chart, you can see we're starting to get back into this prior year-long range that we were in for most of 2014. Again, the bulls stepped in here as well. We need to see continuation. Look at the fast-moving averages, still racing lower, so nothing really changed technically at all here. We're still in this short-term downtrend. Very clear lower highs and lower lows in the Russell 2000. So that is concerning, but today, of course, could be a short-term bottom, maybe a longer term bottom. We just need to see how that works itself out. The Qs, similar thing here. We broke below support 109. We drove higher. Fast moving averages are above it. We're still kind of grinding lower in this flag, if you want to call it that, and we need to get back above 111 and 112 to get as constructive as possible in the Qs. So that's sort of where we are. The big picture, nothing changed today. It was just a lot of movement, and I think the ranges today really speak to sort of the sentiment and just the volatility, perhaps the scared money kind of are just rushing around here. And I also think one other point I didn't get to make with the S&P, with the SPY chart that we looked at before. I really think Monday's candle here, this bull gap up here, closed on the highs, and then all of a sudden we had this rug pull yesterday. Now, of course, today we had it continued, but we saw the reversal. But I think this was a pretty interesting bullish bull trap here on Monday, which led to this sort of potentially this short-term capitulatory bottom that we put in today. So again, that's a lot of just speculation and talking about what could have led to these moves that we saw today, these big moves. But ultimately, we're still range bound, we're still chopping around, we're still trying to find direction here, and there's a lot of movement. We're going to get into it on some of the sectors that are leading and some that are lagging. We're going to get into that in just a little bit. Let's first let's look at some other markets. TLT saw a little bit of a bearish reversal today, was making progress earlier in the day, then it closed on the lows. It's got this gap from yesterday that perhaps it wants to fill. Still very healthy above all the fast moving averages. TLT is still grinding higher, so I think that's still a good place to be. USO is held yesterday's lows, still getting beaten up. Meanwhile, the energy sector, XLE in particular, is really ramping. We're going to talk about that in just a little bit, but still a very much bear market here in crude oil. Nothing's changed. Strong downtrend, fast moving averages still racing lower. Now UNG though, this one is more constructive. I tend to like what's happening here. All over the past 2 weeks, I've been watching UNG pretty closely, and I mean the bears definitely had a chance to really break natural gas down over the past 2 weeks down here, but we did manage to hold that bid. Yesterday we closed strongly right into this messy area right in here at 1368, and then we had the nice gap up today. Didn't close exactly on the highs, but any continuation above this $14 level, I think we can start to really push up here to the top end of this range. I think it could happen pretty quick. So 1450 would be the next target if it can get progress above today's highs. If you look at a weekly chart, you can see starting to look like potentially a constructive base. Fast moving averages have caught up. They're curling, they're trying to curl up and support price. So might have seen enough of a base develop here to see natural gas potentially get a lift. We'll have to see if that continues, but I do like UNG. I like the look of it, so that's something worth watching. Let's look at some of the leading sectors today. Was utilities had a huge bid today, up almost 2% on the day, and you can see, if you zoom out here, look at a weekly chart, you can see they've been in a downtrend for all of 2015. They're starting to perk up. They're at resistance now, right around this 45.30 level. We want to see if they can get continuation there, but right now XLU definitely seeing rotation into this sector. A lot of names moving higher today, so keep those on your radar. And then XLE, this was also the big mover today, up 2%. So these are sectors that previously earlier in the year that were not leading. They were the dogs of the year. XLE and XLU, they were the avoids of the year, and you're starting to see some money come into these, and these names really helped push us higher today. So that's a change of pace. On the downside, you have XLF, which suffered today. Again, look at this crazy tail over here from today's session, but still managed to be down 1% on the day. So financials under some stress today. Let's see how they handle that. Let's see if the tides are turning for financials or not. And then even the discretionary sector, XLY, not a very good day. Again, we did have a reversal off of the lows, but giving up these gains and giving up this potential breakout at $77 that we saw in earlier July. So that's something to keep an eye on of those 2 weak sectors. Now let's get into some individual names. Apple had a really nice reversal today. It was trading all the way down below sub 110. It managed to close and reclaim yesterday's close, made progress on the day, up 1.5%. Looks good. I mean, short term certainly looks good. Fast moving averages still down. I don't know how, I'd want to be still pretty tactical in this name unless you're trying to accumulate for the longer term, but Apple's still damaged here. I don't like it that it's below all of this previous supply down here at 122. For me, I just need to see more digestion down here to get a healthy base out of this, but tactically, there's certainly movement here, so congrats to anybody that jumped into that today. Google, of course, we had the news yesterday on the new spin-off of the company. This one is holding up nice, held the gap from today, looks constructive. It's tough to chase this. Moving averages still trying to catch up to it, but again, momentum is certainly favoring the bulls here in Google. Netflix, this one was still down today 2%, but still look where it is. Even though it was down 2%, it's still at the 8-period exponential moving average, so still very fast. Trends really strong. Nothing's changed in this name. Buying the dip has worked in Netflix repeatedly now for many months, so look to continue that strategy until it doesn't work is sort of the best advice that I have. It's just not my strategy, so I unfortunately am avoiding that one. Amazon, this one closed flat today. Tried to break down here into this gap, but the bulls did step in. Want to see it reclaim this 525 level right where it closed into, and eventually needs to get back above this 540 level for me to really like it for some type of momentum breakout there. So keep an eye on that one. Facebook again, nice looking sort of maybe double bottom from this candle right here. These lows are now pretty important down at $91. Closed right at the fast moving averages. We want to see this continue to lift, but Facebook putting in some consolidation up here. It's nice. Perhaps this is some type of flag base that it's building out before it makes a run for this big $100 mark. We'll have to see on Facebook. Twitter's held in there as well today. This one's still damaged. Fast moving average is still racing lower, but it's trying to hold up from this 10% up day on Monday. It's trying to hold the top, 60% of Monday's bar or so. I think your next trigger long would be above 29.65 or so. Basically today's highs or yesterday's. Yesterday's highs at least, but again, you still have a little bit of a fight here with these fast moving averages heading lower, so might need to settle that one in a bit more. Alibaba, this one was post earnings. This one was reactionary from earnings yesterday. Closed on the highs, near the highs of the day, but still not very favorable based on their outlook. This is all-time lows for Alibaba. This one just not that interesting to me at all. It's got got this gap. Maybe it wants to fill it, but still looks pretty in trouble there. GoPro, this one also was down really big earlier in the day. They did step in and buy this, snap this $60 level. Not interesting to me at all until it gets back above this $60 level. I really liked it here on Monday. Was contemplating a buy on it on this day. I just wanted to see it close a little bit stronger, and then of course yesterday it really got taken out back to the woodshed, and today we saw a continuation to the downside. So that one looks like a void right now until this one can settle up. Fast moving average is going to start curling down pretty quick, so that's an avoid for me at this moment. Now let's look at some names that could be a pretty nice setup for you for later in this week. X-Ray is the first one. This one had a nice breakout today, 2.25% to the upside. Broke out above all of these recent highs, and this should be all-time highs for the name. Yes, it is. So this one looks good. Recently broke out here earlier in July. Look for some continuation in X-Ray. OC is another one. Building materials name. This one's trying to get going here above $45. This one looks pretty good. It's been an uptrend for a little while now, trying to make a move today, outperformed nicely, so that one looks pretty good. SWHC, my friend Smith & Wesson, I actually bought some of this today. I like the breakout here to new high, the closing highs here. They're not all-time highs, but they are closing highs. 52-week closing highs in Smith & Wesson, so I'm looking for this one to continue a little bit. And then finally, LMCA. This one's not ready just yet, but you can see it's going pretty high and tight here, holding up pretty tight up here, 38.70 or so, where these cluster of highs have been holding it down. You want to look for a breakout really above $39. You get a lot of supply right here to the left of you, so you want to get a breakout above $39. I think that one could be interesting. You get the big gap here from November of last year, so keep an eye on that one. Not ready just yet. A couple of names on the short side here. ANTM, I'm actually involved in this one. We got involved in this one on the short side today as well. Broke down below this 151, 75, 50 level, however you want to measure it, but this one looks to be in trouble. Could be a potential topping pattern here, so I'm looking for some downside follow through there. And then finally, a lot of the bank names actually on the short side. I haven't got to finish my short scans, but a lot of them have been showing up. BXS is one example of them of it. You can see a break of support today below $25, and there's a handful of these names that look to be in similar formation. So these, again, if you continue to see this rotation out of financials, you could see more pressure here. So keep that on watch as well. And that's what I have for today. So hopefully you survived the day, the roller coaster today, okay. Certainly a testament and a test of everyone's risk management strategies and principles, and hopefully you did okay. So as always, thanks for watching, and I will catch you next time.